are bouncing up a little bit. We got WTI still below $100. A big drop yesterday. Brent trading above close to 104 and reclaiming some ground from yesterday. As a former frontline journalist myself, it seems that every day we're spoiled for headlines. A time when, in my day, you'd have one of these a quarter, maybe. We're getting 10 of them a day. And I don't think I've ever woken up to a morning before where one of the foreign ministers of the world's major nuclear powers has declared that there is a serious threat for nuclear conflict, and the markets haven't even reacted. It's rather extraordinary. Are we immune, or are we just ridiculously stupid? What's going on? I'm going to go maybe to the wisest man in the room. I don't know. Richard Radoglia, CEO, Matrix Global Holdings, sitting in sunny California, a longtime market actor and watcher. How do you reflect this morning, the day the Russian foreign minister has declared on the table a serious, quote unquote, outlook for nuclear conflict?
Thank you very much, Sean. As I said before, as I sit here in San Diego, I don't think I have the right to really pontificate too much about nuclear powers and what they're going to do. But I did watch the.
Well, have you ever woken up a morning in your life where one of the foreign ministers of the world's major nuclear powers have declared nuclear weapons on the table? I mean, there was the 62 piece with Cuba missile crisis. I'm not sure we're there yet, but nonetheless, seems like a historic moment.
I think what it does, what it says to me, and what I've been kind of talking about this on the last year or so, is to me it's about information technology. Information technology is moving so rapidly. Information is happening is so fast. Everything is known instantaneously. This is not the first time that they've said the word nuclear. In fact, I watched the Piers Morgan Donald Trump interview, which I recommend for everybody to take a look at that. It was an interesting interview about talking about nuclear war and what Trump would say or not say. It was just interesting. But I think it has to do with information technology and how it relates to everything that we see and do, how we calculate supply and demand. It's all happening in real time now. We know everything that happens almost instantaneously. And maybe because of that, and this is a question, I don't know the answer to it, maybe though people aren't kind of immune to everything. They've heard the word nuclear. This is not the first time. I think we can't take it out of context. Putin has said the word nuclear 2 or 3 or 4 or 5 times in the past month, has he not? Has he not said something about nuclear
There's certainly
war?
been positioning of putting nuclear weaponry into some kind of more active posture, but I don't think we've had the words of serious likelihood or serious potential. I don't think that has been the words, or certainly been quoted as.
But again, I would push back and say they have said it. They've said the word. Don't count this out. It's not like it just came out. It's not like we've been sitting here quietly and all of a sudden someone said, I'm threatening nuclear war. They've been talking about this. Don't push us too far. Don't get involved. Don't put your troops here. They've been saying this for a long time. I mean, for a number of weeks. So to your point, though, I don't
like the Fed saying we're going to raise interest rates by 50 basis points. We're going to raise interest rates by 50 basis points.
Right.
Oh my God, they've raised interest rates by 50 basis points. Let's hope it's not the same analogy where they're warning us of something they're going to do.
So I really believe this has to come down to the information technology. We could all sit on Zoom calls and talk to each other around the world instantly. We're seeing it all the time, and it's happening all the time. So I do not want to downplay a major power talking about nuclear war and there's something goes wrong here a week from now. But I do think this has to all do with how we're all dealing with each other and how we're dealing with the information that is upon us at all moments. And this comes back to what we talk about here all the time, is how it affects energy prices. and how it affects the market. And I really think that is, to me, the common denominator here is our ability to process information in a tweet in 146 characters. And I think that's really where this world has changed, and it's not going to slow down.
Let's go to Clyde Russell, Asia Commodities and Energy columnist at Thomson Reuters, sitting in Australia on the other side of the world from Richard. Clyde, maybe what it tells us this morning after Lavrov's comments, oil markets are moving slightly upward without much to think about, that this is a well-supplied oil market where demand outlook is uncertain. And so whatever Lavrov says, from an oil market point of view, we're well supplied.
Oh, I think that's quite a long bow to stretch to say we're well supplied at the moment. I think there's a whole range.
But you're not seeing any panic in the oil markets, is my point.
No, we're not seeing any panic in the oil market. I think I think the market is now starting to treat Russia a little bit like it treated Iraq. I don't know if you remember Comical Ali and his
yes.
Statements of imminent doom. And
I don't see any tanks. What tanks?
So, I agree. Russia should probably be taken a little more seriously than Iraq or North Korea or any other nuclear-armed rogue state. Not that Iraq had nukes, but I think until we actually see some sort of more serious posturing from Russia, I think it's safe to say they're trying to encourage the West not to give too much support to Ukraine. But the oil market is sitting kind of and looking at that. I mean, from my perspective, I say we still to really see the impact of how much oil we're going to lose from Russia. That's a May story and probably a bit beyond that. But now, sitting in Asia, the thing that we're seeing is, how bad is all this demand destruction going to be in China? If Beijing goes into a lockdown, what sort of impact does that happen? You've got to remember, China's, takes 10% of the world's oil via imports. So it is a significant player. Couple of cautionary notes on that. Just because China's fuel consumption is dropping doesn't necessarily mean their imports will drop, because in 2020, when COVID started, their consumption went to pot. It lost 4 million barrels a day, but they actually imported more. But that's because oil was cheap in 2020. It's no longer cheap. So there's a few things to sort of balance out there. But at the moment, I think oil at $100 is walking that knife edge between worrying about Russia and worrying about demand, not just in China. You're looking now at the recession in Europe and throughout the developing world.
Let's go to Amina Bakr, Deputy Bureau Chief and Chief OPEC Correspondent at Energy Intelligence. Amina is off camera this morning. Amina, I would welcome your thoughts on any of these points we're mentioning, but particularly wanted to pick up on the Energy Intelligence report, I think, overnight yesterday, regarding the outlook for the Iran nuclear talks, why they're stumbling, stalling, collapsing. Some insights on that.
Good morning, Sean. Yeah, that's right. We had a report basically saying that the nuclear deal seems very complicated at this point. Personally, I don't see a deal happening anytime soon. I mean, we've heard previously from U.S. officials saying that the Iranians have asked for terms that are outside the nuclear agreement. So the negotiation is still happening. However, we just don't see them agreeing to anything anytime soon. So the idea of Iranian barrels coming into the market to relieve some of this price tension, or what the U.S. believes that, if they get extra supply from somewhere, that would help bring the price down. It's very unlikely that this will come from Iran. And in terms of OPEC, Sean, just given the demand uncertainty that you've mentioned this morning, I don't think that the group who are due to meet next week are likely to change their policy. They're likely to just keep things in place, steady, and just watch what's going on. And I mean, given as well, like all the geopolitical uncertainty and the ongoing conflict between Russia and Ukraine, that's something that's not ending anytime soon. So I think the group are just going to sit back and watch how that plays out.
But nonetheless, Amina, they do remain together. The group, 20 odd countries, of course. OPEC plus is essentially plus Russia. There's no mutterings that you're hearing in your contacts that would indicate that the group, that there's any fracture emerging in this group. Obviously, this agreement expires in September.
No, not at all, Sean. They seem to be sticking together. I mean, they all want Russia to continue to be part of that group on a higher level as well between leaderships in the Gulf states and Russia. I mean, this is something that they've discussed on that level. So they seem to be sticking together for now.
Richard, I wanted to get your thoughts on an issue that came up yesterday. Again, the structure of the market, the backwardation, where there seems to be, or at least from what was a fairly widespread to the back end of the market, $5-6 a month ago, now seems much tighter at $1. You had some thoughts on the explanation for that.
Yeah, Andy Levin made a good point, or made an interesting comment last night. I think that what we've seen in markets that move into backwardation, and what we saw the original move here, where we had extreme price movement. I think what is interesting, and there's some charts I was looking at, and they call it the tale of 3 Junes. And when you look at prompt June, the high to low of June 22, looking at the chart here, is a $25 differential. June 22. The high to low of June 23 is around $2.50 differential. This is March 8th to now, and the high to low of June of 24 is $1.50 differential, from around $84 to around $83 right now. What that tells me is that what we're seeing in the market is the market's trying to find balance. Clyde made a very good point. It's a knife's edge. COVID demand in China, Russia supply. What I think the market is telling us is, be careful about the future. How are we going to transition in the future? What's going to happen? Where is the supply going to come from? I think that the chart I thought was a very interesting that we just came up, showing we're 99% of demand and we're 97% production. Even if we get to 99% of production, are we going to be in balance? I always ask the question, what happens when demand goes to 103, 104 million barrels a day? This to me goes to the heart of the issue of what we're faced with. And we can look at the prompt market right now and its action. But when we start looking forward, I think what we're seeing with these forward prices staying relatively elevated, if not almost at their prior highs, is the market's not worried about now, it's worried about the future. And that's where value is. And the reason I think it is very, very important is that the normal way that the market balanced itself historically was by investment in the oil patch. People would come in and put production online to come online 2 and 3 and 4 years forward. That is not happening. We are not going to see that. We'll see some production in the Permian, but as it relates to how the government wants to play this, how the green policies want to move forward, the normal balancing acts of the forward curve or the forward price have been a function of supply. I don't think we're going to see that anymore. We're talking about other forms of transition. And I would argue that the ability of the world oil markets to transition away from natural gas and crude oil, let alone coal, but natural gas and crude oil in particular, is going to be not well served by wind power and solar power in year 23 to 27.
Clyde, if we could drill down a little bit into the China outlook. Your colleague at Reuters, John Kemp, has written that oil prices paralyzed between Russia sanctions and China lockdown. And I think that narrative is clearly bedding in. And the question is, on both cases, right? The Russian supply concerns are not yet materialized. You indicated in your earlier comment that could still come. It's obviously incrementally coming. May declare that in a more profound way, and we've had forecasts that could be up to 3 million barrels a day by the IEA. But on the demand side, the China lockdown side, how significant do you think that is becoming? It certainly seems that the impact sort of Shanghai, with Hong Kong first, then we had Shanghai dominate the headlines. Now Beijing is coming into picture.
Well, putting a figure on it is you actually get quite a wide variety of estimates from people who actually track this sort of stuff, and it goes from like a relatively modest 250,000 barrels a day of lost consumption in China right up to somewhere around a million and a half. So I would always tend to sort of err on the side of caution and say, worst case scenario to me is they're probably about 1 million barrels a day of consumption down. Will that start to feed into imports and sort of take away some of the world demand? I think yes, but nothing happens that quickly in the physical market. Oil arriving in China now was bought in February, January. Oil, if they are to cut back, if refiners in China are to cut back, then that's not going to be a story that's going to happen much before June, July. And then you also have all these other balls in the air that you have to look at. Will Beijing throw a lifeline to the refining sector and say, well, actually, you can export, so you can continue to import crude, export products. Right now, the profit margins on diesel are quite high, so Chinese refiners would be keen to play in that market. They're certainly, crying out for cargoes in Asia and in Europe. So I would expect that that's still in the realms of possibility. You've got to throw in, will the Chinese act to stimulate their economy on the assumption that they do get this COVID outbreak under control, or will they abandon their zero COVID policy? All these are still unknowns. I think the one factor that I always think in China, I always keep in the back of my head, is at some point they are likely to stimulate and they're likely to hit the accelerator very hard. Now, the point is, when will that be? Will it be when they control COVID, or will they start to hit the accelerator prior to that? I think the longer they have these COVID problems, the more the pressure comes to stimulate their economy.
But my question on that would be, Clyde, just to jump in, because I think it is important, because there is that expectation. But I'm wondering, what does that look like? You can't build another highway, another forest of apartment buildings as stimulus. What does stimulus look like in a Chinese equation in 2022?
Well, they start projects. That's what they do. So they start building things, and they always have a pipeline of stuff that they can just start quite quickly. And it does actually mean residential towers. It does mean railways. It does mean harbor extensions, that kind of stuff. But they also have the ability to ramp up very quickly quite a lot of high energy intensive industries like steel. They can take their capacity, build it back very, very quickly. Right now, Chinese steel mills are running below 80%. They can get up to 90 quite quickly. Refineries can increase their throughput quite quickly. The same goes for aluminium and all these kind of industrial processes that can happen quite quickly. And then they'll just stockpile any excess. So they make too much steel, they'll just stockpile it until they start to use it. So when stimulus happens, when we say it can happen quickly, it's those sort of fast start industries, or relatively fast start industries, that will ramp up very quickly. And they all happen to be generally quite energy intensive, not necessarily oil and gas, but a lot of coal in there as well. So that's what I expect to see. Those are my early indicators. If they start hitting the gas on output of sort of raw materials, or just beneficiated materials.
That's assuming that they let people out of their apartments to actually go to work. Richard,
exactly.
The overarching narrative increasingly in this sort of demand supply battle that is clearly underway at the moment, with oil prices frozen, stuck, let's say, in the $100 to $110 range, are these dynamics. But the one other big dynamic that is also starting to look fractured is the US economic outlook. Still the sort of engine of the global economy, whatever happens in China, but the sort of clouds are gathering with a bionic interest rate cycle starting in a week or two. Your thoughts on where does U.S. economic outlook go, and with it, obviously, that 20 million barrels of oil demand in the U.S. market?
Very good question. And I think we saw the first blip the other day with the stock market falling 1,000 points pretty easily. Somewhat of a dead cat bounce today. We'll see where it continues. But I think you're right. We're going to see a rush for the exits. We've already seen the growth stocks have been annihilated and don't seem to be going anywhere. Netflix is one of the better examples of what we've seen. The real question is the energy GDP ratio in the United States is very, very low. I'm not sure if economic activity beyond some driving is going to see a relatively large move, maybe a large decrease in oil demand. Is there an effect worldwide? Again, I think Clyde's comment on what stimulus by China will far outweigh any kind of recession. I don't want to say a recession just yet, but a significant pullback from the equity market. So I have tended to look at the U.S. over the last 4 or 5 years, and maybe even longer, and maybe other OECD countries, that our energy GDP ratio is so low now that the normal economic activity that would cause a slump is a lot less than it has been historically. And on top of that, think about the balance between people going to work, right? So the balance of people going back to an office. I was visiting my daughter just recently in New York City, where something like 45% of all offices or greater, people aren't in their office. In California, the roads, I know they're busy, as they always are around LA, but they're not crazy busy. So I don't really think that the effect of raising interest rates has a dramatic effect on oil demand. I think, in my mind, the effect is really will be oil and natural gas supply going forward. I don't see that changing. And if I can just read one quote, this is from the Wall Street Journal. Well, you want to get a minute first, but
no, go ahead.
This is from the Wall Street Journal the other day, and it's the editorial section that says, John Kerry says the darndest things. And what John Kerry says, we need to put the natural gas industry on notice. You've got 6, 8 years, maybe no more than 10 to get your act together. You need to capture your emissions. Otherwise, you need to deploy other sources of energy. Well, that's great, John. I wonder how we're going to do that. You can't even build a pipeline.
It's certainly a thesis that is playing out in Europe in a big way as we see an energy crisis. So in 5 years ahead of John Kerry on that particular narrative. Let's go to Amina, because Amina, I do want to get your thoughts about where we go from here vis-a-vis OPEC new supply, because clearly the US is ramping up. There is no doubt that we're going to get back above 13 million. We're seeing all the data. We had an infographic today with shale more or less back to where it was pre-COVID. What's happening in the Gulf OPEC countries at this time? Although they're not increasing supply ahead of the OPEC agreement, but they are adding capacity, correct?
They are adding capacity, Sean, and I think just for the immediate issue, I mean, the issue of limited spare capacity is still there. We're still talking about that 2 million barrel a day spare capacity that's in the group, and that's the spare capacity that they're not willing to tap into unless they see an actual huge physical shortage, and then they would use it. But yes, they are building capacity, but that capacity won't be delivered in Saudi Arabia, for example, until 2027. That's an additional million barrel a day, and the UAE is also increasing its capacity to 5 million barrels a day, and that's going to be delivered around 2030. So we're still a few years behind, I mean, before we get any of that new capacity coming in.
And is it in accordance with the current OPEC Plus agreement, Amina, that come September, all essential parameters are off and the likes of Saudi or the UAE could ramp up to whatever their full capacity would be at that time? Is that correct, unless there's a new deal in place?
No, I mean, that's not necessarily the case. I mean, they're going to meet obviously before the deal expires, and I expect them to put some kind of framework in place, which includes quotas. Again, we don't know what this new deal or new pact is going to look like, but I suspect that they will have some kind of deal in place that will include quotas, just to give structure around their cooperation. But one thing I think they need to be addressing at this point, I mean, we're seeing compliance levels now move north of 150%. And in order to give the group a little bit more credibility, they need to reassess these quotas and redistribute them, or just reduce the volumes that they say that they're adding. They need to just, figure out a way, at least on paper, to look a little bit more credible. And I think that's something the group needs to address.
Well, and also maybe we also need to find a different word than compliance. It's a very gentle, generous word for what is actually happening, i.e. I cannot pump any more oil. Whatever the word for that is, I think it has to get into the mix. Let's go to the survey question and get a thought of where we started our talk this morning. Russian Foreign Minister Sergei Lavrov warned there's a serious danger of nuclear conflict. My question is, what does serious equate to in percentage probability in your mind? Obviously, everybody might have a different view, but nonetheless, what does serious equate to in percentage probability? Close to 10%, 30%, 50%, or is it 0%? This is just a big nothing burger, as they say. Your thoughts? It's not one that I can answer in 10 seconds, but nonetheless, put on the spot, what does serious equate to? It would indicate to me that the markets wake up this morning saying, well, serious equates to nothing, because they aren't reacting in any way to what seems like a fairly profound statement. So I'd like to know what this room thinks serious translates to. And Clyde, thinking of just outlook in the more immediate sense, this dynamic of the markets as we see bouncing, they sort of drop to 100, then they go back up again, 110, they come down. Do you think we're stuck in this spot now unless something dramatic changes?
Yeah, I think we're kind of stuck around this $100 barrel level. I think there's still a good $20, $30 of risk premium built into it. I think the idea that we're on the cusp of a nuclear war is at the moment not a serious risk. It's something to keep in the back of your head, but I think it's just posturing by the Russians at the moment. In fact, I hope it's just posturing by the Russians. But
that's what everybody said in January. I just hope they're parking those 200,000 soldiers around the border of Ukraine because they've nothing else to do.
Well, there's a big difference between invading a neighbor and threatening global mass destruction. And you always work on the assumption that wiser heads will prevail in Russia. And the other question you have to ask is, would the military people actually tasked with pressing the buttons actually do it? Even in America, they had a debate as to whether the military would actually do what Trump would order them to do, because they seem to take the view that Trump was unhinged. In Russia, it's probably much the same debate. So you always hope that there are some checks and balances that would prevent nuclear weapons from being launched. But I don't rate it as a serious risk yet.
Richard, your closing thoughts to this market volatility continues in this 100 to 110. Anything that you identify that could break us out of that in the immediate future?
I don't think so. I think that the problem, and we've kind of talked about this a month or two ago, is that the extreme volatility is a function of a raise in margins. Margins have been significantly raised. Interest rates are going up now. So even the largest merchant traders in the world have a significant amount of capital needed to put on a simple position that can move $5 in any given day. So when you increase volatility, you increase margins, you reduce the amount of open interest, which then has the continual effect of increasing volatility, and on it goes and on it goes. I think one of the interesting things we're seeing is that the front end of the curve is almost flat. We've seen this before. We can go back to on another story. We can have a discussion about this, but this has only happened a few times in history when markets are trading this high that the spot spread is almost flat to the next nearby. I think the bigger story here is the forward curve. If you hear what I mean, that's to say about what OPEC thinks demand is going to be 6 months, 12 months, and 18 months from now. That to me is really where our focus should start to lie as it relates to how are we going to meet this rising demand in a world where investment is going into blue and green hydrogen. I just don't understand it yet. I feel like I'm in an alternate universe sometimes when we talk about this. They want to increase natural gas production. They just don't want to invest in it.
Let's get the survey result and give Amina the last word this morning. Interested to see where the room's view is on this. Serious equates to 10% probability and 0% probability get the most votes. But there's 20% of the room that thinks it's a 50% probability. Wow. If that was even marginally reflected in global traders today, God only knows what kind of heart attack the markets would have. Amina, I wanted just to close out with your thoughts and insights vis-a-vis the Saudi-US relationship at the moment. The US general narrative is Biden wants Saudi to pump more oil, and Saudi keeps saying no because they're not in a very good relationship at the moment. Is that what you're hearing? Is that a narrative that's oversold, or where do you think that's at from your reporting? Have we lost Amina? Silence. That's where it's at. Maybe she had to drop off. Okay. We will wrap it up there. I think I agree to a certain extent with what Frank Kane has posted in the chat room, that the possibility here has been mentioned, and Richard, you referred to it earlier references to nuclear, is this idea, and how obnoxious as it is might be, tactical nukes used in a battlefield environment to sort of break down the resistance of what does seem like a formidable Ukrainian army, a bit like the Americans did with the Japanese in the Second World War. It's like, oh my God, there's no way to get this thing to end without doing the big kaboom, and perhaps that might be what the thinking, as horrific as that is. But nonetheless, that would seem, if that was the question today, maybe the probability number would be more. But anyway, that's something to think about. I think we do have to take these things more seriously when they're declared and not be immune, even though the noise is loud on so many different things. The foreign minister of Russia is a serious person in a serious job, representing a serious chap, and I think it's one would behoove to pay attention. I presume somewhere in Washington they're all dusting off the Cuban Missile Crisis documents and saying, well, what do they do when that happened? And that, okay. Richard, all the best. Thank you so much.
Thank you.
Clyde, thank you so much for joining us. And Amina, thank you for checking in. We'll catch up every morning, 10:30 UAE time. All the best.